let's switch gears now because Nigeria's banking sector is being reset. By 2026, some banks must raise capital to about 500 billion naira, others 200 billion. Some banks have already met this requirement, some are in the process, some won't make it, unfortunately. So let's break down what these new thresholds really mean to you as a shareholder or customer with funds deposited in those banks. So back in 2024, the central bank mandated banks operating in Nigeria to up their minimum capital. For banks that want to have international presence, they are required to raise their minimum capital to 500 billion naira. So which means they could have global presence, they could operate across Africa and even offshore. So these are top tier one banks with international subsidiaries. The other tier of banks would be banks that want to have just national presence. They don't want to have branches across Africa. They just want to operate nationally. These banks are expected to meet a minimum capital of 200 billion naira. So they will have scope to operate nationwide within Nigeria. Most banks already fall within this category. The third tier of banks will be banks that want to have just regional presence. These banks are expected to meet a minimum capital of about 50 billion. So they're going to have a limited scope of operation. So they could think of it as a bank that wants to have presence maybe just in the southwest and the southeast or south or the northwest or north central. So these are banks with limited scope or limited geographical zones for them to operate. Now, so some banks have already met this requirement. So let's talk about some of the banks that have already met this requirement. Access Bank have met this requirement. Zenith Bank has met this requirement. Guarantee Trust Bank, Stanbic IBTC, Wema Bank, Jay's Bank, Providus, Premium Trust Bank, Greenwich Merchant Bank, Lotus Bank, Citibank, and Globus Bank. These are banks that have already met these requirements. Now, it's important to stress that these banks are not all operating in the same tier. Some have met the requirement for tier one, some have met the requirement for tier two, and some have met the requirement for tier three. Now, banks that are yet to fully complete the recapitalization exercise, there are banks like First Bank, UBA, Fidelity Bank, FCMB, Sterling Bank, Standard Chartered Nigeria, Polaris, Unity Bank, Optimus Bank, Nova Merchant Bank, Titan Trust, Paralex Bank, Alpha Morgan Bank. These are banks that have not yet met the recapitalization. Now, some of these banks are in the process of meeting that requirement. Recently, First Bank sold off FBN Quest in a bid to also shore up capital to be able to meet this minimum capital requirement. Fidelity Bank had a successful public offer, but that amount was not sufficient to meet the recapitalization threshold. So they are currently in talks for private placement, same as FCMB. FCMB is also in talks with for private placements and UBA as well. So these are some of the banks that are currently in talks to meet that particular threshold. That threshold must be met by March 31st of 2026. So it's currently unclear whether the CBN would be extending this deadline or the CBN would be ensuring that banks meet this capital requirement by the 31st of March of 2026. Now, so I've been asked, what should you do as a shareholder, or what should you do as a depositor with funds in any of these banks. So let's break it down. Let's start with as a depositor. Now, as a depositor, you really should not, have any concern because in the past, the central bank has always ensured that depositors don't lose their funds in any bank. So whether this bank fails or it is acquired, or is merging with another bank, the central bank has always ensured that depositors don't lose their funds. Now, this is what the bank tries to do to avoid a systemic issue that could impact the banking system. But the central bank is not required. Okay, the central bank is not required to pay off all your depositors' funds. That's why we have the NDIC. The NDIC ensures for every depositor up to about 5 million naira. So if you have 5 million naira with any bank, or if you have above 5 million naira with any bank, the NDIC insures up to 5 million naira with a deposit bank. Now, if you have money with a mobile money operator, that is also insured up to 5 million naira. If you have funds with a microfinance bank, the maximum amount that is insured by NDIC is 2 million naira. And if you have funds with a primary mortgage bank, the maximum amount insured by NDIC is 2 million. If you also have funds with a payment service bank, the maximum amount insured is 2 million. Now, just to break it down, in the past, whether in Nigeria or even globally, the Apex Bank have always strived to ensure that banks or customers with funds in any failing bank do not lose their funds. Okay, so for you as a depositor, I really don't see any things to be worried about. Now, but for you as a shareholder, this is where you need to watch the progress, watch what your bank is doing. Because if the bank is unable to meet that recapitalization exercise, so a number of things could happen. One, the bank could be acquired by some of these top tier banks like Zenith, Access, GT. They could acquire the bank. All right. Now, what you need to ask yourself is, would they be acquiring your shares at a discount or at a premium? Because if your bank is failing or is not able to meet that requirement, so you cannot negotiate an exit that's going to be favorable to you if you currently hold the shares of this bank. Now, having said that, most of these banks are in the process of meeting the capitalization exercise. So what you want to do is to really watch out at what is going on in these banks to be sure that these banks are going to meet the deadline. Now, this is not a time, if you ask me, to be expanding your investments in some of these banks. You probably want to wait to ensure that these banks have met the requirement before you expand your investments. You might hold their shares, or if you ask me, I would say reduce your holdings in some of these banks until you're sure that they have met that minimum requirement. So that's what you should be looking out for if you are a shareholder in any of these banks. But other than that, if you are a depositor, there's absolutely nothing to be worried about. But for you as a shareholder, you need to be totally switched on in the next 90 days to ensure that your investments are secured with these banks. Now, some banks would obviously be profiting from these arrangements. The top tier banks, the likes of Access Bank, Zenith Bank, GT Bank, will be in the market to take or acquire any of these banks that are unable to meet up with the minimum capital requirement. So it won't be surprising if you see customers switching and moving to some of these top tier banks in the weeks and in the months ahead. So this is what you should be watching out for as the deadline draws for the banking recapitalization exercise of March 2026. Thank you. I hope you've enjoyed it. If you enjoyed this, please consider liking this video, share it, and subscribe to this channel. Thank you.